We're going to be talking about the senior bonus deduction through the recently passed big, beautiful bill, and this is how it works. Okay, so you have to be 65 years old in the tax year that you're taking the deduction for. Okay, we'll go through some scenarios here. You can file single, married, filing jointly. The deduction can apply in both those scenarios. Now, some things to keep in mind. There is a phase out period. So you have a full deduction amount here at, if you're a single tax filer, up to $75,000 of income. If you're a joint tax filer, it's up to $150,000 of income. And then here you can see where it starts to phase out. $175 for a single taxpayer, and then $250 for a joint tax return, filing jointly. MAGI, that's modified adjusted gross income. So that's line 11 on the 1040. That's the adjusted gross income. The modified is they add back in certain forms of non-taxable income into that calculation. So here's how it works. It is added to other deductions. Okay, it lowers your taxable income. It can be combined with other tax credits. Now, what it does, it lowers your taxable amount after that adjusted gross income number. So we'll go through some examples here. Okay, this is all pretty standard. Like we talked about, reduces overall taxable income, may reduce the taxes that you're paying on the Social Security benefits indirectly. Okay, basically it reduces your tax liability. All right, so as somebody that's single, 65, okay, they're going to get this full $6,000 deduction if they're making $70,000, because again, that's under that $75,000 threshold. Married, making $140,000, you're getting the full $12,000 bonus deduction because you're under that threshold before the phase out occurs at $150,000. Okay, now you can see here, you're married, filing jointly, making $160,000, you're not quite getting the full deduction because you're over that $150,000. So you start to get into this phase out period, which I'll explain how that phase out period works. Once you're over $250,000, there's just no deduction. Again, this is filing jointly. Okay, so let's get into this phase out example. So number one, let's take this $160,000 filing jointly. So the way the phase out works is for every dollar that you're over, you lose 6%, 6 cents, which is 6% essentially. Okay, so you're going to lose 6 cents of bonus deduction, right? So if you're 10,000 over, that equates to a loss of $600 of bonus deduction. So again, instead of getting the full $12,000 in that scenario, you are at $11,400. So that's some quick math in how that works. Okay, so let's take another example here. Let's do, somebody that is single tax filer making $90,000. It works the same way, right? So single tax filer making $90,000. They are $15,000 over this where the phase out starts at $75K. So 6% of $15,000 is $900. So instead of getting the full $6K bonus deduction, they are going to get $5,100. And again, if you looked at a 1040, I always tell people I don't expect them to have their tax return memorized. But if you look at the 1040, line 11 is your adjusted gross income. The line below that is where you start to see the deductions. Like this is where you would typically see like a standard deduction. That's where this bonus deduction is coming in. Okay, so essentially it's reducing your taxable income. So it's a quick overview of how this whole senior bonus tax deduction works. It's good to work with somebody that understands not only this, but Medicare as a whole. to kind of give you an idea of, your Part B IRMA and other ways your income may affect your healthcare premiums going forward, especially as you start to enroll in Medicare.